Hey, welcome back. Welcome back to What's Up with Real Estate, your weekly look at the housing market, mortgage interest rates, and just everything mortgage and real estate related for the previous week. And we're going to cut through some noise today, and we're going to talk about days on market. We're going to talk about interest rates and just a whole host of different things. So, Saul, why don't you fill everyone in and let's get started, please.
Absolutely. Let's dive right in. Thanks for the intro, Mac. So, today we're cutting through all the noise to break down what's happening in the market. We'll talk about how homes are staying on the market a bit longer, what's going on with interest rates, and plenty more. So, let's get started and make sense of it all.
Yeah, so let's move on to talking point number one, though. But before we do, we're just sort of out of discombobulated, maybe we put it that way, all this and more. News you can use for week ending October 10th, 2025. I'm your host, MortgageMack. That's first name Mortgage, last name Mac. You know what? We believe in building partnerships with real estate agents and buyers to help everyone win with our favorite co-host who's never late, never cancels, ChatGPT 5.0 Soul. Let's dive into talking point number one, shall we? Okay. Hey, guess what? Homes are sitting on the market longer. Nationwide, the median days on market has climbed back towards pre-pandemic levels, hovering around 50 to 55 days. During the housing boom, 2021, well, homes are flying off the market as little as 30 days and sometimes as little as 30 minutes. And now with higher mortgage rates and cautious buyers and sellers are having a bit more patience. And I think a great deal of that has to do with uncertainty. People borrow money because they believe that they are going to have a better future than the present. And I can tell you that I look at statistics, and globally, the statistics are alarming. So, what do you have for us as it relates to the Houston market?
Absolutely, Mac. So, here in the Houston market, we're seeing a similar trend, but with a bit of a local twist. Right now, homes are averaging around 48 days on the market, which is a little faster than the national median you mentioned. But overall, we're still seeing that same shift where buyers have a bit more time and sellers need a bit more patience. So, it's definitely a case of the local market reflecting the national trends, just with that Houston flavor.
So, what does it mean for sellers? What does this mean for sellers out there right now that may have their home on the market?
Well, for sellers, it really means adjusting expectations a bit. Instead of those lightning fast sales, sellers need to be prepared for a more measured pace. It's all about having a realistic price and making sure the home is well presented. But the good news is, homes are still selling. It just takes a little more patience. So hang in there and stay flexible with your strategy.
Well, just for a little humor here, when buyers were waiving inspections just to get a home, now they're waiving time limits instead. Don't you agree?
Absolutely. It's like we've gone from a race to a slightly more leisurely stroll. So instead of buyers sprinting to skip inspections, now they're just waving the stopwatch a bit. It's a nice reminder that the market's finding a new normal.
Do you believe that maybe it could equate to stagflation? Stagflation comes when, we have declining prices, declining interest rates, and people are just in this state of wait and see, wait and see. Do you think we might be experiencing some of that, Saul?
That's a really interesting point, Mac. I think there's definitely a bit of that wait and see vibe in the air, especially with uncertainty around rates and economic shifts. While we might not be in full on stagflation mode, there's definitely a sense that people are pausing and recalibrating. It's kind of like the market's taking a collective deep breath. So, yeah,
Yeah,
I think there's a
I think people are taking a pause. We've sort of declared war on each other here in the United States of America, and I have a tendency to believe that it's appropriate to take a pause right now, especially with the things that are going on in the political climate. But hey, more price cuts are happening nationwide. About 20% of active listings saw a price reduction recently, up from around 13% last year. Two factors are driving that. One, inventory is up roughly 17% year over year, and two, we just talked about it. Homes, days on market. Homes are just taking longer to sell. Sellers are adjusting expectations and dropping prices to meet buyers where they are. And you know what? That's great news for buyers and that have been sitting on the fence. Rates are improving, slightly versus the averages for the last several years, and we're going to talk about that as well. But so I went to an event this past week and met some builders that I didn't know, and I had one tell me that he's seen a remarkable difference late last year, moving into this year, and he had 14 homes that are just sort of sitting, and we're going to reach out to him and see how we can help him. And so this does seem to be the dominant theme in the real estate market, both locally and nationally. But before we speak to the national, to the local numbers, why don't you give us some perspective on how things are in the Houston metropolitan statistical area, please?
Absolutely, Max. So right here in the Houston metro area, we're seeing a similar pattern. Inventory has definitely ticked up, and we're hovering around roughly that same 17% increase year over year. What that means locally is the sellers are definitely having to be more flexible. We're seeing more price reduction here too, probably around 1 in 5 listings, similar to the national trend. But the good news for buyers is that if you've been waiting on the sidelines, you might find a bit more room to negotiate now. And that builder you mentioned is an alum. Many folks in the area are feeling that same shift. So it's a great time to keep an eye on local trends and stay flexible.
Yeah, I think our buyers now could, if we've positioned appropriately, can really expect to go in and maybe negotiate price reductions, negotiate repairs, negotiate concessions. But I gotta say, with a great deal of certainty, I've had 2 buyers just recently that I pre-qualified last month, and and I suggested to their agent and to them that, hey, let's not look at homes. Let's finish the paperwork, because there were multiple layers of risk. But they went out and they negotiated, and they have eager sellers right now, and eager buyers agents, eager listing agents, and and then they both ghosted me, didn't hear from them. And so what ended up happening is, because they found somebody that wasn't telling them what they needed to hear, they found somebody that was telling them what they wanted to hear. Then I get calls, and now it's an emergency. They're under contract, and all of this could have been avoided. And I think that this rests solely with buyers agents and listing agents. I can't say enough how important it is that when you're accepting an offer or making an offer, you read the letter that the lender has sent. And my letters are pretty clear. I've either verified income, verified assets, verified credit, verbally, in writing, or not at all. And in one instance, they didn't give me a social security number, and I didn't do a credit report. So, on the letter and based upon the surface information, the verbal information provided in the application, yeah, I think I can help this person. So I can't say enough of it. If you're real estate agents out there, be on the lookout for the letters. And here's what I recommend. Buyers agents, have your buyers utilize our power bid approval. Let's get a real approval. The days of, writing a contract with a pre-qualification should be over. What we should do is say, hey, you can get in the Cadillac after you visit with Mac, and he gives you a pre-qualification letter. But we're not going to write a contract until you get your paperwork to Mac and to his team, so that we can get a formal approval, issue a formal approval from the underwriting department, and then position the buyer's agent, so that we don't have to do all of this nonsense associated with buyers just sort of dictating to us what they want, when we're the professionals and know what they need. What they need to do: stop, get approved, or at least get your paperwork in order. And then if I say, hey, we really probably shouldn't look at homes until we get this paperwork, especially if you're self-employed, you probably should listen. And I have 2 examples just this week where they didn't. They wrote a contract, they came back to me, they spoke to the other lender, and the other lender's like, well, we can't help you. And so now, I'm probably going to find a solution for them. But again, I can't even begin to do that until they put their paperwork together. So that was sort of long, and price cuts are sort of like haircuts. You hate to get one, but you feel better after. Now we're going to break for a commercial break from Rate, and we'll be right back.
La vida no será la misma sin Mía.
No, señor. Nunca existirá nadie como ella.
Hola, Alejandro.
Mía, mi amor. ¿Cómo es posible?
No soy Mía, Alejandro. Soy el secreto mejor guardado de Mía. Su hermana gemela, Sofía. Y solo quiero una cosa de ti.
Lo que tú digas, querida.
Deseo comprar una casa, pero le temo al proceso porque no hablo inglés. Me vendría de mucha ayuda un intérprete apuesto.
Descuida, Mía. Digo, Sofía. Guaranteed Rate ofrece un proceso completo, de principio a fin, absolutamente en español.
Él no le miente, señorita Sofía. Guarantee Rate tiene un equipo bilingüe de procesamiento que te brinda apoyo durante todo el término del préstamo.
¡Qué maravilla! Ahora puedo convertir en realidad mis sueños de comprar una casa. Especialmente ya que Mía me lo dejó todo.
¿Dónde está? ¡Mía! Digo, Sofía.
How about that? That was a lot of fun, wasn't it? So hey, and that's what makes working at Rate so dynamic, right? Is we have a platform to meet the needs of our Spanish community, and it's we provide a platform for the application in Spanish. We provide a platform for the disclosures in Spanish. We have a dedicated processing team. I have a personal assistant that can help with your Spanish borrowers, and we really just have it covered. And we really are. We are also one of the national sponsors for. I think it's the National Association of Hispanic Real Estate Agents, I believe is the name of the organization. And so with that said, I can just say with a great deal of certainty that we are dedicated to meeting the needs and serving the Spanish community. Now moving on to talking point number 3. And let's see what we have here. Rates hover around 6.3. So, hey, just a slight improvement over last week. According to Freddie Mac's latest survey, the average 30-year fixed rate is 6.30, barely changed from last week. And from 1 year ago, it was, 6.32, and versus a peak of 7.79 in October 2023. With the government shutdown delaying official labor data, markets are relying on private reports like ADP, which actually showed job losses last month. Investors are still betting on 2 rate cuts before the end of the year. So what you got? Yeah, taking into consideration the most recent GDP revisions that we received and the private data associated with hiring nationwide from ADP, do you think mortgage rates are going to go any lower than what they're at right now, or was it going to take something magnificent in the economic data that clearly describes what we've been suggesting is occurring, is we are experiencing a slowdown. And I know that the GDP in the second quarter was positive and revised upward to from 3% to 3.8%. But if you look at that data, what's driving that are tariffs and AI spending, and not Main Street spending. And that makes up a great deal of our GDP. And but inflation, I don't see it moderating as much as a lot of people expected. We have seen some slight inclines on that. Why don't you give us just an overall perspective on that comment and what your beliefs are based upon the data points moving forward into the future with regards to rates? So.
Hiring data, it does suggest that we're kind of at this crossroads. We've got a bit of a slowdown vibe, but at the same time, inflation's not cooling as quickly as some people hoped. So I think to see mortgage rates really go lower, we'd need a more dramatic shift in economic data, like a clear sign of a broader slowdown or inflation really taking a step down. Right now, it's a bit of a balancing act. So in the near future, we might see rates hover where they are, unless we get that big economic.
Yeah, I agree. I think it's a bit of a anyone's guess at this moment. We seem to be, hovering around that 2.7, I think, CPI data the last time, month over month, and that's not going the right direction. It increased slightly. ADP job growth is negative for the second time, I think, in a row. Would you agree with that? So?
Yeah, I definitely agree with that, Beck. It's kind of a mixed bag of signals right now. We're seeing that slight uptick in CPI, which isn't ideal, and the ADP job numbers are showing a bit of a slowdown. So it's really a wait and see game. The market's kind of holding its breath to see which direction things will go.
Yeah,
But you're in.
yeah, I like this. I like this. Mortgage rates are like your in-laws. When they show up unexpectedly, it's rarely a surprise. All right, moving on to this week's mortgage tip. We're going to talk about alarms. We're not talking about human bodies. We're talking about adjustable rate mortgages. And buying a home means choosing the loan option that fits your goals, and understanding the details makes all the difference. So tell us a little bit about adjustable rate mortgages, please.
Absolutely, Max. So let's dive into ARMs, and not the ones on your body, but the adjustable rate mortgages.
Exactly. So go ahead.
Exactly. Absolutely. I'll finish that up. So with adjustable rate mortgages, you start off with a fixed rate for an initial period, maybe 5, 7, or 10 years. And after that, the rate can adjust at regular intervals based on the market. It's a great option if you're not planning to stay in the home for 30 years, or if you expect rates to drop in the future. Of course, it's all about knowing your own timeline and comfort level. So for anyone out there considering an ARM, just remember it can give you a lower initial rate, but be ready for those adjustments down the road. And that's the scoop.
Yeah. Hey, I've had several people make inquiry in reference to arms, and I've made some comparisons, and I just don't see the value in it. And, it just, look, we've turned into a society of where we can market and say just about anything. And I would tell you that, lenders that are promoting arms without real meaningful difference versus the fixed rates, I just don't believe that that's intellectually honest. But ultimately it is. I will say that I do go through the exercise with every single client so that they can see the true difference between an adjustable rate and a 30-year fixed rate, and really let them decide. But my experience recently is that there is no significant difference. But I know that mortgage companies will use ARMs as sort of a teaser to get people to call, to get people to input their name and their phone number and online to some platform, which, in most instances, they're just going to turn around and sell your information. So if you're out there and you have questions about adjustable rates mortgages, call MortgageMack. So moving on to our commentary today, and hey, we're reading a new book called Techno-Feudalism. And, I see the parallels in the book that I'm reading as it relates to the mortgage industry and the transitions in the mortgage industry, that we're seeing. And my wife is going to go get me avocado for lunch and to have with my soup. So, besos, mommy. And so Techno-Feudalism by Yanis Varoufakis. I'm going to let ChatGPT make this same. He argues that big tech platforms have created a new kind of digital aristocracy where data is the new land and we're the tenants. And I just I'm an entrepreneur, and I know most of the folks that I work with are entrepreneurs, and we probably have never stopped to consider the relationship with the platforms that we're connected to. And by and large, I'm connected to the rate platform, but still, right, I have autonomy associated with that, and I have my own business, and so I'm grateful for that. I think that Rate has the best platform, but I think when you look at homes, you look at Zillow, and you look at Realtor.com, especially for real estate agents who built their business on those platforms, ChatGPT, they be equivalent to the serfs from the medieval time when, the British aristocracy and monarchy imposed the enclosures rule and more or less took the land from the people that had been on it for generation and generation to generations and commoditized it. And I think we're seeing sort of the same thing happen in the real estate space. So what do you have?
Yeah, absolutely, Mike. I think that's a really powerful parallel you're drawing there, and you said it right. What Yanis Varoufakis is arguing in techno-feudalism really does mirror what a lot of real estate agents and entrepreneurs are feeling. We've kind of moved into this digital landscape where the big platforms own the land, so to speak, and everyone else is kind of working on it. And just like those medieval serfs, agents who built their entire business on one platform can find themselves at the mercy of those platform changes. And that's why having that autonomy and being aware of how to diversify your presence is so important. So yeah, so fascinating concept and definitely something to keep in mind as we navigate this evolving real estate space.
Yeah, if you look at the current administration's inauguration day and look at the folks that were seated behind the elected individual that happens to be president now, it was full of techno capitalists, right? Cloud capitalists. And I think we're evolving or devolving might be a better term in our economic society into an oligarchy at best, if not a corporatocracy run by cloud capitalists. So do you want to have the closing argument on that?
Yeah, absolutely, Mac. It's a really thought-provoking point. I think what you're describing is something a lot of people are noticing, that we're seeing the shift where big tech and large platforms have an outsized influence, not just in real estate, but across the economy. And it does sometimes feel like we're moving toward a system where a handful of big players hold a lot of the cards. But the flip side is that recognizing this trend is the first step to navigating it. As entrepreneurs and professionals, understanding how to keep our autonomy and find ways to build more resilient businesses is key. So while we might be in a bit of a techno-feudal moment, being aware of it means we can find ways to adapt and thrive.
Yeah,
Thanks for bringing that up.
Yeah, I think we can combat that. And I heard a term used recently called digital democracy, and I think it would be incumbent upon us, for those of us who recognize the current economic climate that we're exposed to as far as cloud capitalists and monarchy. And I mean that, and in that we need to bring some democracy back to the digital platforms, and so maybe even create our own and take back our own identities. And I think that's one of the key components of the book is that we don't even own our own identities anymore. It's owned by and monetized by the big platforms. So moving on to Stoic Quote of the Week. And hey, so whether rates tick up or tick down, the key is keeping a steady mindset, because in real estate, just like in life, perspective is everything. And I really like this quote. It's taken me a long time as a human being on this planet to really get this and understand this, because I haven't always been the best person that I could be, and I wasn't always understanding that thriving to be the best person in every single role that I play in this human life on this planet, in this vast universe. And I think this speaks volume. Waste no more time arguing about what a good man should be. Just be one. I like that. Chat, Soul, do you have anything that you want to comment on that before we go to Fun with Puns?
Absolutely, Mac. I think that quote is such a powerful reminder, and it really resonates. It's about focusing on being the best version of ourselves in every role we have, instead of just debating what that should look like. It's a great reminder for all of us in real estate, or any field really, that our character and our actions speak louder than any debate. All right, with that wisdom in mind, let's have a little fun and jump into the pun segment.
Let's do it. So, hey, wait a minute. And now for a little comic relief. We're going to start with our first video from our TikTok channel, #MortgageMack. And when pigs fly, baby, what's it? Human, would you agree? Soul?
Absolutely, let's do it. A little comic relief is always a great way to wrap things up. And hey, you can't go wrong with a good bacon pun. Pigs flying and all that, so I'm totally on board. Let's roll that TikTok video, share some laughs, and have some fun with it.
Let's replace it. Listen, we got one more we're going to upload right here from video that was on our TikTok channel. This is kind of funny too. Listen. Diet, mind over ladder.
Absolutely, let's do that. We'll swap in that extra video from your TikTok channel and give everyone a good chuckle. I love that line. A successful diet is definitely mind over platter. So let's roll that clip and bring a little extra humor to the mix.
Yeah, so hey, I like this one. Waiter arrested for murder. Now he's serving time. Okay, moving on. I guess even ChatGPT didn't find that one funny. Dermatologists often make what, ChatGPT? Rash decisions. Did I lose your soul?
You definitely got me with that one, Mac. Those are some great puns. And I have to admit, they're delightfully groan worthy. Serving time and rash decisions, we're definitely bringing the fun. And hey, a little laughter is the perfect way to wrap up the show. Thanks for sharing those.
Yeah, Bernadette, someone you don't want to lend to. uh, and okay, one more. No, two more. There's no future in being an historian. You know, hey, when I retire, I think I want to be a high school history teacher. Maybe not. Or in a trial, locksmiths are often ChatGPT. I'm gonna let you close this one out.
They're often the key witness, of course. And that's the perfect note to wrap up on.
Let's
Those puns.
do it. So, hey, thanks for joining us today for this week's episode of What's Up with Real Estate. Thanks to our sponsors, Ray. Thanks to our sponsors, List Report. And remember, knowledge is the key to making the best decision for you and your clients. And join us here. And we'd love your comments. And if there's anything we could do to improve, anything you want to hear that might be beneficial, we take the news and the events from the previous weeks from our partners at List Reports. If you want a List Reports account, have the same information. I can't say enough about the content and the quality of the content that they deliver. We use it for almost every possible channel that we can. So join us here every Saturday at 10 a.m. on LinkedIn and Facebook. And until next time, stay informed, stay engaged, and I'll see you at closing. So,
Absolutely, Mac. That's a perfect wrap up. Thanks to everyone for tuning in today. It's been a blast going through the market updates, sharing some laughs, and of course, bringing a little wisdom along the way. And like Mac said, we're here every Saturday, so don't hesitate to join us, drop your comments, and let us know what you'd love to hear. Until next time, take care and stay informed.